and receiving the money. And consumers, they are at disadvantage because they don't have much options, right? Because countries not importing from other countries, right? Rather countries exporting. So if producers increases the price because they don't have much competition in the country, so who are at disadvantage? Consumers. And who are at advantage? Companies. So trade surplus is good or bad? Tell me. The trade surplus is good up till if your country is in stable position. And trade surplus is bad when you have decline situation. So it depends. If the question says that country is in stable condition, then it is good. If the question says that country is declining because there is not much option left for the country to expand, then of course, if you are exporting, there would be your competitor country that is also rising, and what happened? Your competition will be like wiped out, and you don't have much other options to expand, and then you start declining. So surplus is bad for declining stage of the country, but good at for the stable stage of the country. But remember, in surplus, the consumers, they are at disadvantage. Why? Because they don't have much options or much choice of imported products. Okay, so what about the imports, the deficit stuff? So are we clear regarding the exports, everyone?
Yes.
Yes.
Okay, Harry, Fabian,
Yes.
Min, Nam, Ping Ping, Dot, Chandler.
Yep. Clear, sir.
Okay, good. Okay, now let's talk about the deficit stuff. So this is the country. Money is coming in. Money is going out. If money is coming in, going out, then inflow is called exports. And this is called imports. So in that case, when we have deficit, imports are greater than exports. So now you tell me who is the at advantage? Either companies, producer, or the consumer. So who is at advantage? Guys, can you hear me?
The advantage?
Yes.
Yes, consumer.
Why? Because now consumer have a lot of choices to buy imported goods, right?
Yes.
Consumer have a lot of options to buy imported goods, so he will buy that product which is cheap and of good quality, because there are many products that are coming from other countries that are of good quality and also cheap, right? So companies, if local companies, they would compete with those imported stuff. What does it mean? It means they will improve their quality, their pricing, or otherwise they will be wiped out. So that's why consumers are at advantage. What about the country? Which stage is in country, and whether the deficit is good for the country or bad for the country? Let's talk about this. So whether the deficit is good or bad. And the deficit oriented countries are where? Stable, decline, growth. Guys, tell me whether the deficit is good or bad. Fabian, Kathleen, Haley, Harry, Marilyn, Joanne, Nam. Guys, can you hear me?
Yes.
Yes.
Can we say it's good? Not sure though, because since there are many options and therefore the prices of the goods will be lower, so that consumers will buy more goods, so that the money will rotate. So I'm not sure it can be good or bad, because for the business side it will be bad.
Okay. So, country's perspective, define this is good or bad. So your answer is related to consumer, not country. Any other?
Sir, it's both good and bad.
It is more
It's
good or
both.
bad?
It's both good and bad together.
How?
Yeah.
Can you explain?
Because like for the good side is that it's mean that the country is in the good side and the economic is like quite strong. That can lead to like the better economic in the future. But the bad side is that we import more than export, and that should cause something for the company.
I also agree that I see the in economic science that are much lower price, much quality that's lead to competition. So in this way, it's good.
And how about the bad stuff?
Bad side, it's for the bad side is for business, for personal business. They are in a way, I'm thinking is good size more than the bad. That's what I thought. I think it's good, more good than bad.
Okay, Kathleen, do you want to say something, or Marilyn?
I was just gonna say maybe it's bad because I know the word deficit is like when you lose. So I would say it's a bad thing.
Okay, Marilyn.
I also think it's bad.
Okay. Thinking.
I think it's bad.
Yeah. So, okay, let's talk about the answer here. So we know that deficit is good for consumers, but whether it is good for country or not, answer depends. It can be bad, can be good, right? But let's talk about the good stuff. So when countries are in deficit, it means imports are greater than exports. When imports are greater than exports, what happens? It means country is importing a lot of machinery, plant, businesses are expanding. When businesses are in expansion phase, they import a lot. Like for example, Tesla. The Tesla is not yet started selling heavily, but they are investing too much. They are buying large gigafactory materials billions of dollars of, big plants, right? They are hiring people, but still the company is still not, it's on its full capacity to sell the goods. It's in very infancy stage, right? So in that case, when companies are expanding, right, deficit is good, right? Because deficit is because the businesses are expanding, like in China. So when China is a developing country, it means there's a lot of other possible business opportunities. So when a country is developing country, let me write it down here. Developing country, then deficit means it is in growth stage. It means companies are expanding, and why expanding? Because they are ordering a lot of raw materials from outside countries, from foreign countries, buying plant, very costly plant from outside countries, and that's why they are having deficit. It's a good sign. What if a country is developed? For developing country, it is good. For developed country, it is bad. Why? Because a developed country, they are no more importing the raw material from the outside world, or they are no more importing the big plant machinery from outside the world. It is in declining stage. It is not lot of no more business opportunity left in that country. In that case, if imports are greater than exports, then deficit is catastrophic, very, very, very bad for developed country. Okay, so answer depends. If the question says the country is developing country, for developing country, deficit is always good. For developed country, it is bad, right? For developed country, the companies are at their full potential. They are not expanding. They already expanded. Now they are selling the goods to exploit other markets. So that's why developed country must have positive surplus rather than deficit surplus. Everybody understand that? If you have any question, please do ask. Guys, this is really important discussion. We will be having a lot of questions regarding this in our exam. So please clarify your concept.
I have a question.
Sure.
So the surplus and also deficit is not always good and bad, and it depends on the situation the country is dealing with.
Exactly.
Okay.
So you need to, there is no one hard and fast rule. You need to see the situation and apply the knowledge, right? And think in terms of consumer, company, and then overall perspective, country's perspective, right?
Okay.
Okay, any more question? Okay, let's move forward. So